Now let's move to economical risks. We will of course come back later to talking about economical issues, but he will talk about risks, specific risks that we are thinking of when we're talking about a project. The first biggest risk for starting a project or a startup is what? It's that you are starting something that is not profitable. You think it will be profitable, but it's actually not. It's a hopeless case. You have to do a proper economical analysis of your project before you run it. Regardless if it's a fishing equipment or women's garments who are expecting a baby, or if it is a cafeteria going to open, or a software you will develop, or whatever it is, you must calculate first, and how to do it we will come back to later in this course. A second thing that can hit many is that the setup cost to start up the whole thing was much more than expected. I have seen people coming to me and they had so and so much money, and they placed the first test order, a small order. But because it was a test order, a small order, they didn't earn money on that. For earning money you have to have a certain volume, and they wanted a test order. So what happened after that? The money they had for a project was finished. They had a success in the trial sales, but they couldn't continue because there was unexpected big costs. And this is, all kinds of things can show up if you don't know what you're doing. And this is why you have to do your homework first and understand what you're doing and do a good project. During the running of the company also, suddenly there can be unexpected costs. Now this time, for instance, I'm sitting on the middle of the COVID-19 corona pandemic, and of course so many companies get unexpected costs here, which they didn't allow, or less income, rather more normal. So this we must understand, that things can suddenly be there, and to have some reserves for a project, for a startup, is always a very big advantage, because if you are just having a small margin from the resources you are going to have when you start something, then it's an extremely big chance that it's gone. Another economical thing is that if you're not in control of the economy, you are doing something, you're selling and you're buying, you're doing this, you're that, but you don't do the bookkeeping properly, you don't follow up, you don't do any analysis, does it match? Of course it will cost more in the beginning, buying in things, starting up, and you think you are in... No, you need to have that. And if you can't do it, have someone else to do it, someone who understands it. And again, you need reserves for the unexpected. And see that you also have updated figures in your bookkeeping. And then we'll come back later to this, but now I come to some very crucial cash flow issues. Cash flow is about how much money you have in your hand. Shortly, let me explain. Let's say someone is going to have an import company for gift articles. Sell, they have 1 or 2 shops, they want to sell there. No, so they start this project, and they have, let's say, 100,000 in whatever currency. They're sitting with 100,000, and they will buy products for 90,000, and then they will sell it for 200,000, and they say they will have a profit of 100,000. Sounds good. But cash flow, if they do that, such an analysis, they might see that the money that they have to pay when the goods arrives, import duty, VAT or GST, what you call it, in your country, the money you have to pay on the initial base when the goods arrive is more or much more than they had in hand, because they had 100,000, they paid 90,000, and suddenly they need to pay 25,000. The goods arrive, and they don't have 25,000. They didn't see how much cash, because they saw 100,000. They have there, they're paying 90,000 there. They have 10,000 for others, they said, and 200,000. They make 100,000 profit. No, they doesn't reach it, because they have to pay import duty and VAT, value-added tax or GST. So general sales tax. So they missed the point. So you also need to know in the economical risk analysis how much money you have at each stage. I will come back to that later in this course. And finally, I will mention something, tax issues. You say, okay, I'm going to invest 30,000, I will sell for 40,000, I earn 10,000. Then I have some costs here and there, it will still make up. No, it didn't, because you forget the tax, how much you have to pay, and you didn't plan for it, how to do it, and so on. All these things you need to sort out from the beginning, and fees here and there, taxes and other costs that you have to pay for whatever reason it is, you must include that in your analysis of your project to have a success.